Hi there, good morning and welcome everyone to this Moneycontrol live stream. You're watching Opening Bell and I'm your host Stacy Pereira. Well, let's take you through all the cues that you need to be looking out for and all the strategies that you can keep in mind when you get into the trading day today. First, let's start up with how we're looking at Indian equities. Well, it seems like a weak start. Tracking those Asian peers, pretty much all of them down and about in trade, at least in the opening early hours, we could say. All of those Asian markets are not really giving good signals. Even the GIFT Nifty signaling quite a muted start for the Lal Street. But if you look at across on Wall Street, where we saw S&P 500 close much lower, this was mostly weighed down by the decline in banks as well as retail shares. This after S&P has gone ahead now and also cut their ratings for a couple of banks. So banking stocks really pulling down the S&P 500 there. But we're also seeing Asian markets, like I was talking about, those ones trading in quite a tight range this Wednesday morning. We're seeing gloomy factory readings from Japan, which has left quite, the sentiment quite fragile there. But also let me give you a setup of how the trading action transpired yesterday, where we saw foreign institutional investors or FIIs selling shares worth about 495.17 crore, whereas domestic institutional investors, they were the net buyers and have purchased about 533.75 crore rupees worth of stocks. This is the provisional data that we have of August 22nd. But let me also bring you up to speed with all the stocks that saw the highest delivery data and highest interest, where we did see Torrent Pharma, there was Ultratech Cement, Berger Paint, HCL Technologies, L&T were among those that saw a lot of traction in yesterday's trading day. But we'll have a lot of other stocks that are going to be a buzz in today's session. And of course, let's not forget Chandrayaan. Of course, all of us, India pretty much waiting in bated breath, we could say, for that D-Day that it is today. Around 6 o'clock in the evening is when we're going to see, hopefully, that a soft landing and making India the fourth nation then to actually achieve this feat in our lunar mission. So all of that to be looking forward to. But let's talk and discuss stocks and strategies at this point and how we should be viewing today's trading day. And to do that, joining me now is Rajesh Palviya, the Senior Vice President and Head of Technical Derivatives at Axis Securities. Good morning, Rajesh. Thank you so much for giving us your time. Do tell us about, let's look at the broader markets firstly, because I think the party mainly right now is happening in the mid-cap scene. And so let me first directly go there and ask you whether the mid-caps are actually heading to the moon, just like Chandrayaan, because that's where the party is. Is that your sense as well at this point, Rajesh?
Good morning, Stacy. Yeah, the same behavior from the midcap Nifty is showing. It's continuously moving up and it's enjoying all-time high trajectory. So yes, midcap stocks are really doing well, and yes, they are enjoying the party at the current level. Looking at the benchmark indices, Nifty and Bank Nifty both are consolidating at this moment. Nifty is struggling to cross the 19,450 level, and Bank Nifty is struggling to cross 44,200 since last couple of trading session. But on the other hand, on the downside, 19,300 is acting as a good support area. So we are stuck in very tight range for the Nifty. And looking at the overall broader market, we expect that, if at all you get any chance to buy Nifty around 19,350 zone, that is again, buying opportunity. Looking at the near-term setup, keep your stop loss at 19,300. And again, in the pullback, 19,400, 450, where you can book the profit. To play this move of the behavior of the Nifty, we are initiating here to buy a 19,350 call option, which was closed at around 73 rupees in the previous session. So if you get any chance to buy this option around 60-65 zone, you can buy with stop loss of 40 rupees and upside target. We are projecting around 110 to 120 to play this pullback move if you get any chance to buy in the dips. For Bank Nifty, 43,600 is the key level on the downside. And till we are holding those level, the pullback action will be there around those level. And again, 44,000, 44,200 are the level where one can book profits on the trading position if you are buying on the lower side. So overall, indices are both indices are in consolidation, but stock specific action is there. So one should focus more on the mid cap, small cap, rather to focus more on the index. let the index to give breakout. Then again, we can focus more on the index front, but stock specific action one should take in this kind of market.
Right. So in the mid-cap space, then what are the kind of stocks or what are the kind of sectors that one should be looking at? We are seeing a couple of mid-cap IT names that were, trying to do a bounce back, as well as even a couple of auto ancillaries. What would be your picks within that mid-cap space that one should be looking out for?
So some of the stock ideas which we have identified, that is, first is GMR Airport is looking very promising, very strong buying action. Breakout was there on the weekly as well as on the daily chart. So GMR Airport, we are bullish and we are projecting target of 64 to 65. Another stock where breakout was there, that is NMDC. Most of the metal stocks have shown good traction in the previous session. So NMDC is looking very attractive. We are bullish and we are projecting target of 128, 130. Keep your stop loss at 117. United Sprit is also showing good traction. So one can buy United Sprit also for upside target of 1080, 1090 and keep your stop loss of 1010. And from Midcap IT, we do like Emphasis is looking very promising. 4 days consolidation breakout is taking place on the daily chart. So Emphasis is the stock where we expect that, this rally can extend towards 2450 to 2500. So one can buy Emphasis also at the current juncture.
Right. Rajesh, do stay on with us. Let me just give you a little background to our viewers on GMR Infra and why it has been seeing quite a bit, the volumes, the air traffic volumes that have seen quite a surge, domestic air traffic that is, and which is why you're seeing this reaction in that, a sharp rise in the put writing for that particular stock. We can say largest accumulation happening at that 58 strike mark, and whereas put open interests have zoomed by about 324 times. So a lot of action that we're seeing there, which is, translating in that share price also, which is why I guess Rajesh has also kept it in his picks. But just before market opens, let me also tell you about that new listing that we are going to see today, that is of TVS Supply Chain Solutions. Now, remember, this is a part of TVS Mobility Group company, which is going to make its debut on BSE as well as NSE. And remember, the issue price that was fixed at 197 rupees per share. So we are going to see whether it actually gets that grey market premium that it was seeking, whether it is going to list at a premium or not. We will have to wait and see in just minutes from now. But this is a new listing that we're seeing in the main board, especially today, that is going to get some kind of traction. Let me probably bring in Rajesh and ask him how should one be looking at IPOs at this point. We are seeing a flurry of activity in the primary market space pretty much every day. A lot happening in the SME segment, we could say, but also a couple of them in the main board segment. So, Rajesh, how would you look at this IPO, especially at this point? Maybe we'll get back to how to look at this IPO, especially now that it's opening, and we'll see what kind of traction it gets. But let's address market open for you there on your screens. The Nifty 50 positively there in the green. We were expecting a muted start because the Asian peers were not really showing that much of traction. But yes, the Nifty 50 there just about 0.1%, so not that great. But of course, above that 19,400 level. So whether it manages to stay above that 400 level is the range that we've been seeing pretty much all of these days, 19,300 to 19,400, and stuck in that range like we were suggesting before. But the Bank Nifty too also there above that 44,000 mark. So that one again on that upward trajectory. We are hoping that it stays up and continues to be those outperformers. Midcaps, like we were just talking about, the party really continuing for them again on that record high levels that it has been setting and continues to be in the green. Small caps no different. BSE Small Cap Index there also by about 0.5% higher right at open. So a good start for the broader indices. That's pretty much what we've been talking, that the focus has shifted from the large caps to to the broader indices, to the small cap and mid cap. Nifty IT also there about 0.5% in the green, positive start there for the IT sector also, which has been pretty much in the consolidation mode, one would say, like the broader markets as a whole. Nifty Pharma also there on your screens, positively there in the green. FMCG, all of these defensive stocks that we've been seeing, which were taking some bit of beating and now, doing a bit of a U-turn. So consumption patterns, consumption stocks there up and positive in the green. Pharma as well as IT, all of them in the green. Metals, which had got hammered after seeing that dismissal data from China, that one now seeing some bit of positive signs at least coming in there. We are anticipating all of that factory data from other Asian markets as well. Even Singapore's inflation data is what is expected. So all of those signs definitely going to reflect in the stock market as well. Nifty Infra also there. Sectoral wise, pretty much most of the sectors there comfortably in the green today, at least starting today's day on a positive. Realty index as well, though it has seen quite a bit of shift in flows, that one in the positive as well. And also pull up the charts of the ones that are doing a buzz, the stocks that are doing a buzz, the positives, the top Nifty gainers on your screens as Cipla, Hindalco as well as HCL Tech. So we do have ones from the IT space there, Adani Ports, Nestle, as well as Infosys. Infosys is the one that really, has been playing that game for the benchmark indices, really. The other top gainers, Tata Steel there, Divi Lab, as well as Bajaj Auto comfortably. So we have a couple of auto names, a couple of metals. We also have IT names there for you as your top gainers. Let's look at losers now. There on your screens, we have the top losers in Sun Pharma, Bharti Airtel, as well as M&M. M&M, of course, after that recall that it asked for those XUV 700 vehicles, about 1 lakh units. So that one still seeing that bit of pressure. Tata Consumers, Tech Mahindra and IndusInd Bank are your other top losers in trade. HDFC Bank, ICICI Bank and Kotak Mahindra. So a lot of that banking pack there really getting hammered, we could say, today at the start of trade, at least for now, because we've been seeing a lot of traction, in fact, in that banking space, be it private as well as PSU banks. PSU banks being, really taking it on the chin. But let's bring back Rajesh and ask him what are his first few reactions to a market open, especially the banking pack. Even though we're seeing Nifty, the bank Nifty also trade in the positive, pretty much the top losers there from the banking sector. So how is one supposed to be viewing, these banking stocks, or also look at it from a long-term perspective rather than just seeing daily moves? Rajesh, is that the kind of cues people should be taking?
Yeah, definitely. So banking is the sector. Yes, the market is giving you again, opportunity to buy most of the banking stocks, quality bank stocks in this corrective move. Though Bank Nifty is consolidating, maybe some couple of trading sessions we can see this kind of behavior for the Bank Nifty as well as for the banking stocks. But for the longer term perspective, yes, it's an opportunity again to buy and accumulate most of the banking stocks, which are giving you the good price point again to re-enter, as the long-term setup for the market is on the bullish side, and we do believe that this rally can extend further in the coming week or in the coming month also. So banking is the sector where one can focus again to buy. So our preferred pick would be ICICI Bank, HDFC Bank, IndusInd Bank. These three banks from the private sector, and from PSU you can buy and accumulate SBI as well as Bank of Baroda at the current level. After the opening, we expect some traction could be there in the real estate space. So one can look at Godrej Property. In the last session also, there was a good traction in terms of buying, and again in the after opening, buying action is taking place. So Godrej Property is looking very attractive at the current level. One can buy this stock for upside target of 1600 to 1620 for trading perspective. Keep your stop loss at around 1540. Another stock from the mid-cap space, that is KPR Mill, is looking very promising, very strong buying action in the previous session. And after opening, there is a follow-up buying. So we do expect that, KPR Mill can show good traction on the higher side. 770, 780 could be the possible target on the higher side. Keep your stop loss of 710 to buy KPR Mill also.
Right. In fact, Rajesh, thanks for giving us all of those so many different stocks to be looking forward to. But just before opening, we were talking about the IPO and the primary market. So would like to get your last word on how should one be viewing this, because we're seeing a flurry of activity there. So how should one be looking at IPOs, and is it a right time, considering the overall how the markets are in this consolidation mode? Should these stocks that are actually entering the market now be a good opportunity, and what kind of stocks should one be looking at if they are looking at IPO specifically?
So definitely, based on the company, yes, one can participate in the IPOs, because in this kind of bull market, yes, a lot of companies comes up with the IPOs, and again, it's a opportunity. Though the when you participate, again, the allotment ratio is also very low, because the market size is very big. So, and then IPO size is also not that much big. But looking at the overall scenario for the market, as we are in the bull run of this market, so yes, definitely you will make some money in the IPO participation also, when you have a good quality companies, when they are coming up with the IPOs. One should definitely participate in those IPOs.
Thanks so much, Rajesh Palviya there of Axis Securities, giving us all those ideas and strategies and stock picks that our viewers can really use in traders trading session. Thanks so much, Rajesh, for giving us your time. But let's also look at the fundamental picture, the overalls of what really is going to swing these markets, because we're pretty much seeing listless trade, or that range-bound trade, and it has been so for the last week or so, not really being able to break those resistance levels at least. So let's discuss that. But before we get to my next guest, let me also bring you up to speed with a couple of stocks that you need to be keeping on your radar and why they should be. One will be that of a Vodafone Idea. Now, this is because they are likely to clear about 2,400 crores of their dues that they owe to the government, and they say that they'll do that by September. Now, the company will clear this dues for the June quarter for that payment of their spectrum installments, which is applicable along with interest now. Now, this is the news that is coming in from PTI that is telling us why this is important. Well, Vodafone Idea has to pay that total license fee of about around 770 crore rupees, and this was supposed to happen by July. And by an additional 1,680 crores was their first installment for that spectrum that it purchased in the auction that was held last year. So this is going to be interesting to see how Vodafone is going to, will they be able to actually pay up all of these dues that they owe the government? That will be something to keep on your radar. We also have Apollo Tyres, which is seeing a downgrade rating, which has been downgraded to neutral by UBS. Now, this UBS has gone on to change their target price for it by about 430, and this is because their deleveraging and domestic business are seeing some positives, as well as the exports in the European region. Those ones are being some bit of a concern. Now, despite the rise in crude oil prices, they do not see any commodity related headwinds for the company, and which is why Apollo Tyres is something that you need to be keeping on your radar. They expect stable margins though going forward, as well as the valuations are now somewhere at about 6.7 times the FY25 estimates EV to EBITDA. So broadly in line with what markets are anticipating. But let's discuss fundamentals now that we were talking about, and joining me to do that is Prateek Parekh. He is the Vice President of Equity Research at Nuvama Institutional Equities. Thank you so much, Prateek, for giving us your time and getting us up to speed and telling us what we need to be looking out for, because the fundamentals, at least for India compared to its peers, we would say are pretty much in the right place. So what really could be those headwinds that one needs to be looking out for going forward? What, according to you, should be that moment that we should need to keep caution for, especially with this bull run that we are seeing, although in consolidation mode now?
Yeah, hi, Stacy. Thanks for having me over. So I think clearly India, no two ways that it stands out from the global peers. I mean, India had a very painful 2010s where it spent most of the time cleaning up balance sheets of both banks as well as corporates. And the whole tide has turned completely, post-COVID. Today, if you look at it from a debt to GDP perspective, Indian corporates are best placed in the world. If you look at it from a banking system perspective, it is after almost a decade, we have banks roaring to lend. So I think from that perspective, from a macro standpoint, I think India is very well placed. Now, where concerns are cropping up, I think is around two front. First front, I think, is on the demand side of things, where we are seeing corporate top line for BSE 500 companies slowing down very sharply. This quarter saw BSE 500 companies top line growth of being just 5%. Now, some of it has got to do with commodity deflation, so to that extent, understandable. But there are demand headwinds as well. And the pockets where demand is very weak, I think, is exports. Whether you look at IT, chemicals, it's quite weak. But apart from that, even something like mass consumption items, whether it is QSR, whether it is staples, there as well, the demand is very weak. What is holding up demand very well as of now, I think, is the urban wages as well as what you call government capex. This shows up in the high-end consumption or high-end real estate sales doing very well, and also shows up in government capex reflecting the order book of initial companies. But going ahead, our worry is that there's a reasonably good chance that the urban wages, which are holding strong, could moderate because the corporate this quarter had very large tailwinds from the lower input prices. Those tailwinds are now largely behind. And if that is so, either they'll have to sacrifice margins or they'll have to cut down wages. We think it'll be the latter, and to that extent, there's a risk that the downturn could broaden. So if that happens, then I think clearly earnings and these valuations could be put to test. Apart from that, the second big risk I think is the domestic banking liquidity, which has now turned neutral. If this plunges into a deficit, then clearly market valuations are going to get compromised. And also the rising global cost of capital, where you're having US 10-year yield hitting at 16-year high, it's not a very comforting backdrop from that perspective per se.
Right.
So yes, there are some near-term hiccups, but nonetheless, from a long-term perspective, India's fundamentals, do remain quite strong per se, Stacy.
Right. Prateek, also do tell us a little bit about the report that you all have put out. Yes, we have, we are the fag end of that earnings season, and pretty much your report suggests that we've seen revenues really slow down, but margins are the one that have come to the rescue. Although a couple of large cap names didn't really see that margin change for them. If you talk about SBI and the banking pack, or even a couple of auto names. So tell us a little bit more of what this research is really telling us.
Yeah, so I think what we're trying to tell is that if you look at last year in F22 or in F23, sorry, you had top line being very strong, but you had a big supply shock owing to Russia-Ukraine war. As a result, globally commodity prices went up, not owing to demand boost, but rather supply constraints of sorts per se. This really wreaked havoc on the manufacturing sector margins. I mean, if you look at last year, whether it's FMCG, whether it is auto, whether it's Asian Paints, all these companies' margins took a big toll. Now that tide is reversing. We are now clearly seeing, commodity prices stabilizing, and here the stabilization to some extent has also been with supply, being normalized. So to that extent, margins have helped a lot. But I think eventually top line is the one that dominates. If top line remains weak going ahead as well, there's a reasonable chance that margins may not come through. And here, where we see the risk maximum for margins is clearly on the export sectors, where demand is quite weak. But also, I think on the banking space, as you rightly said, that banks had a dream run last year. I mean, it was a year where margins expanded, credit growth accelerated, and credit cost came down. This is a real purple patch, which has happened probably first time in more than 10 years of sorts. Out of that purple patch, margins are clearly have topped out and should moderate going ahead as liabilities reprice higher. The pace of liability repricing will depend on the liquidity conditions, but broadly, we think it should move higher. And credit growth too, it remains strong, but it is no longer accelerating. So I think that is another space where we are quite cautious on the banking standpoint, because we think earnings can turn decisively on the other side as we move ahead in the year per se.
Right. So Nifty earnings pretty much stable for this quarter, and we'll have to look out for what we get to see. But before I let you go, let me ask you a couple of sectors and stocks that one should be keeping out in their radar, and how they should be playing this consolidation mode that we are in. How is one supposed to be navigating it, and what would be your strategies and picks at this point?
So I'll restrict my commentary to mainly sectors. I think if you look at from a sector standpoint, the current backdrop is one of uncertainty. I mean, today with markets running up so sharply, that it doesn't feel that way. But I think we need to be even more cautious given the very one-sided rally that we have seen in markets. In such a backdrop, I'm more comfortable, having sectors with defensive positioning. We think sectors which are cash rich in nature, which will benefit from falling input prices, and where demand is relatively less discretionary, is the one where one should be overweight on. So in our model portfolio, we are overweight on domestic autos, we are overweight on cement, telecom, and even internet, where we think the margin profile is headed for the better of sorts per se. Apart from that, we are also overweight IT, despite the global gloom and doom. And the simple reason for our overweight on IT is that we think the stocks are quite attractive from a relative valuation perspective. And given the high dividend yield, clearly a downside or there is a floor that is there. And that's why, some of those stocks are also worth looking at of sorts per se. But nonetheless, these are stocks that one should look at. Where we are cautious on, I think, are cyclicals. Clearly, global cyclicals like metals and chemicals, are still not yet reached a buy zone. And apart from that, I think in industrials and banks as well, especially industrials, valuations are way too high. And today we are at almost close to decadal high margins and very strong order book. Any small swing on either of them can lead to derating in some of these stocks per se, Stacy.
Right. Prateek, also give us your perspective. We are seeing a couple of downgrades and, revisions coming in for bank, especially when you talk about in the US. We just heard of, overnight S&P also going ahead and giving that warning to big banks and also cutting and revising their ratings for smaller. Do you see that kind of, some kind of impact that could also flow, or a dominoes kind of effect having coming here into India as well?
Yeah. So I think Indian banks compared to US peers are much better placed. I mean, today, if you look at it, Indian banks are far better off whether you look at balance sheet, whether you look at monetary conditions, or whether you look at the cost of capital. I mean, in US, 10-year bond yield has moved from 1%, a year back to 4.5% now. That's a very steep rise. In India, bond yields have moved from 6 to 7 quarter of sorts per se. So the quantum of rise is much lesser. Second, Indian banks are, balance sheet wise, are far better off. So the rub-off effect, which typically happens when you have US banks taking a hit on coming onto India, I think that is delayed. But where the contagion effect can really kick in is if you have US banks hitting a recession or, another default, maybe in commercial real estate or some other small bank going through, then I think that can be a broad-based risk off where Indian banks' liquidity conditions too could tighten, and the stocks and earnings of these companies also could weaken per se, Stacy.
Right.
But compared to the past, we definitely have a lot more shock absorbers, is what I would say.
Right. So that contagion, probably not seeing that immediately, but one could be cautious in general. Cyclical stocks is what Prateek is saying to be more cautious about at this point in time. Well, thanks so much, Prateek Parekh, there for giving us those ideas, giving us insights into that report that Nuvama has put out as well. Thanks so much for joining us this morning. Well, with that, it is a wrap and goodbye from the entire team that puts this show together. Thanks so much for tuning in, but also do post in your feedback for us in the comment section below and give that link on the bottom of your screens. Well, all the rest of the updates, especially that of Chandrayaan, all of our eyes are definitely waiting their bated breaths for what that lunar mission will really transpire and whether we manage that soft landing. We will be going live with that, with ISRO going live at around 5 in the evening when that touchdown is supposed to happen. At least the time that they've given is 6:04 p.m. this evening. So with crossed fingers, we are going to be waiting to see what Chandrayaan 3 really does. And for all those updates, you need to be coming back to moneycontrol.com as well as the Money Control app, because we are going to be getting you all those updates. Thank you so much for tuning in.
How do world leaders view India?
I've long believed that the relationship between the United States and India is will be one of the defining relationships of the 21st century.
the bright spot of the global economy.
The growth rate for India, which is 6.8 in 2022. Let's not forget, this is one of the bright spots in the global economy right now, such a high growth rate.
The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it.
On the verge of a big transformation.
इस अमृत काल में हमारे संकल्पों की सिद्धि हमें आजादी के 100 वर्ष तक ले जाएगी.
A magnet for investment.
I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world.
The world is bullish on India. Moneycontrol is bullish on India. Join the campaign. Tweet to us with hashtag MC Bullish on India.